Okay, good. Right. So we'll start off here. Well, first of all, we'll have a look at gold and we will progress through the other commodity markets as well. So gold, what do you need to know at the moment? Essentially, gold right now, if you have a look at the price structure going all the way back here, we can have a look at the beginning of January this year up until the highs where we came up to 1,375 US dollars following on from Brexit. We can see here there is a very key underlying channel, which again did get supported on non-farm payroll. So if you can just draw that up very cleanly on your chart, if you don't have this already, it's worth adding on. Very clear channel which needs to be added to gold. Now, since that point, we've taken that opportunity from non-farm payrolls to load up on additional longs here on gold. You can see we developed a nice rejection candle at that trend line, nice pop on non-farm payrolls. And we've had a nice move high here back towards 1,350 US dollars per ounce. Now, this afternoon, watching gold very carefully here, we've got two overhead trend channels which I would bear in mind. Now, the first is the shorter term channel here, and I'm watching this to see whether this is very simply just going to be a bull flag formation. So we've had a downward trending channel which has been in place over August. We've popped above the high here. We're now retracing, and note, you want to have two channels on. Don't just have this channel here, okay? That's not enough. So you could argue, okay, we formed a rejection candle at this zone. Gold's going to pull back. It will just ricochet between 1,350, come back for a retest of 1,300. Be careful. I would suggest that gold won't go that low. At the moment, we've got underlying support, the 50-day moving average, the 21-day moving average. We've also broken above some significant resistance zones here. And if you go out to higher timeframes here on gold, it's also starting to build up a really nice base here off the back of some major Fibonacci levels. So I would keep a very close eye on gold where it is right now. This new trend channel, you can draw on, in case you don't have it already here. You can draw it on just at the lower end. You can draw it from the previous resistance channel, which is now turned into a supportive channel temporarily here. So I am watching to see over the course of the US session today. We've just had, of course, the European Central Bank interest rate decision, which has remained unchanged. Stimulus has remained unchanged. Mario Draghi has just finished speaking. And to be fair, it's not really impacted gold too much here. It's had a mini pullback at the moment, but it is being supported by a new trend channel, which is in place at the moment. So just have that in mind right now. Now, gold, I would again suggest if you're not already in a trade, you also need to be careful at these levels. We've loaded up from the 1300s, the 1320 zone, the 1330 zone, to a point now where we're in a position where we've got risk-free trades here, where we can continue to actually ride this rally for a breakout above the 1350 zone if it does get above that level. Now, gold isn't out the woods yet. It does still need to break above resistance. It needs to break above the weekly highs. It needs to get above the 1352 zone first and foremost, which is Monday and Tuesday's highs. Monday, we got a nice pop to the upside. In fact, no, Tuesday we got the pop. Monday we formed an inside candle. Tuesday was the good pop to the upside here. And now we need to breach above 1,352 to get an increase in momentum here, to start seeing more short covering and to get a move above the 1360 zone, which provided a lot of resistance over August. You break above that level and then we are flying, because we're only at the moment around $30 with gold, or 300 points away from 2-year highs. So I would definitely have gold on your radar at the moment. This is a major area of resistance. So what have we got coming up over this month that you need to pay attention to? Well, we've just got the European Central Bank announcement out of the way, and it's not really caused a shakeout here for gold. Gold's hardly moved, in fact, and you can see my channels are being supported at the moment. So as we go into next week, what do you need to be aware of? Well, we do have the Bank of England decision next Thursday, the 15th of September. The following week could be the big one on the 21st of September, where we have the FOMC statement, and Bank of Japan as well will be providing announcements. So could get some nice volatility on that as well. And of course, as we head towards the end of the month, we have the OPEC meetings and grain stocks USDA reports, which will be big movers. And of course, a lot of you will be aware that as we go into November, we also have elections in the USA, which is bound to cause volatility here. But overall, right now, I do like this price structure with gold. We've broken out from some key levels. We held support from non-farm payrolls, and I would like to see these levels get held here as we go into towards the end of this week. Now, right now, you can see trend channels would be sitting around the 1335 zone. It could be a good opportunity to add to a position on a retracement if gold does get down to that level. So just bear that in mind at the moment. Otherwise, if we do get a break above The weekly highs here at 1,352. I would also expect some good follow through.